Hello, everybody. Good afternoon and welcome to our webinar, Preparing to Close Your Books for 30 June. In today's session, Inspire is partnering up with Efficiency Partners. Just making sure that everyone can hear me loud and clear. If you've got any issues, pop them in the chat box and we'll make sure we get on top of any technical issues that might come up. If you are having technical difficulties, sometimes it's okay for you to leave and then rejoin. We'll be able to readmit you. Sometimes that helps. Just want to make sure that you can hear me okay, and you can see the slides in front of me. Feel free to ask any questions throughout the webinar, and we will try our best to answer them at the end. We've allocated an additional 10 minutes or so at the end just to go through any questions. The webinar recording will be sent to everyone who signed up today, even the ones who haven't attended, including end of year checklist as well. Very comprehensive one will be sent out to you. I'm joined today by Efficiency Partners founder and director, Alison Joyce. Her company specializes in bookkeeping solutions, bringing efficiency, clarity, and focus back to your business. Alison, you want to say hello to everyone? Sorry, you're on mute. Something wrong with your mic.
Can you hear me, Ali?
Yes, I can now, loud and clear.
Oh, sorry. Thank you for having me. Looking forward to imparting some knowledge with your clients, and you're not your client. But yeah, should be a great session.
Awesome, great to have you. I'll be your co-presenter for today's webinar. For those of you who don't know me, my name is Ali, and I'm the head of product and tax at Inspire. Recently a new dad to a beautiful baby boy called Rami. So if you've got any advice or words of encouragement, please feel free to pop them in the chat box as well. Yeah, I don't know what I'm doing. I don't have a manual, so any help would be appreciated. In today's agenda, we'll be covering why it's important for you to have accurate books, reconciling your bank and other related balance sheet accounts, managing your accounts payable, receivable, as well as your inventory, followed by we'll be reviewing how to review the business assets, finalizing your payroll, super, for the financial year. And last but not least, we'll go through some important dates leading up to 30 June and after 30 June and what to watch out for. All righty, we've got a jam-packed session today. We've got 30 minutes to run through everything. So we're not going to waste a lot of time. If you need to leave the session for whatever reason, you've got commitments, feel free to do so. We'll be sending the recording, but if you want to stick around and ask questions later, that would be fantastic as well. So why is it important to have accurate books and why now? We see many clients who neglect their books in the leading up to 30 June in the beginning of the year, and they have this race to tidy everything up in the last couple of weeks. So that really puts a lot of stress on you, and sometimes it can cause you to make any errors or things of that nature. We want you as well to the more accurate your books are, the less interaction you'll have or unnecessary interaction between you, your bookkeeper, your accountant. So we want to reduce that time, and then we want to use it for high value stuff. For example, if you accidentally overpaid or underpaid an employee, it's much easier and cheaper to fix it now than later when your books are near finalization or have been finalized. So the more accurate your books are, the better advice you'll be able to receive as well. For example, if your accounts receivable figure is correct and can be relied on, we can tailor our advice based on that information. If it's incorrect, then we don't really know how fast or slow you're getting paid. So that's sort of the idea behind why it's important to have, accurate books. Alison, do you want to share some golden nuggets from your experience?
Yeah. So there are many important reasons why you need to close your books properly at the end of financial year. Not only does it save you time and money with your accountant using their time unnecessarily, but you can also use your accurate financials to make really good, clear business decisions. You can use the financials to help prepare your budget moving forward, get a better understanding of your cash flow, and you can also be compliant with your ATO obligations and on time. So a multitude of reasons why you should close your books properly, and ideally not do it last minute at the end of financial year. You should ultimately be doing it all year round.
Absolutely. So yeah, when things are fresh in your head, you can easily recognize a transaction or an overpayment or underpayment. You can deal with it much more swiftly when you identify it early on. Yeah, we want to also avoid any penalties that the ATO might impose on you. If also you identify issues and it's past the auditing period, that can also make it a lot difficult for you to go and amend your tax return. So you want to avoid all those issues early on. Awesome. Now, first on the list, this is where most people will start when preparing to close their books. You want to make sure that you reconcile all your transactions leading up to 30 June. It's important that you go through your bank accounts, your credit cards, even your loans and overdraft facilities. You can download your bank or loan statement online and needs to make sure that it matches with your accounting software. So if those figures don't match, then there could be an issue there. Normally what we see is if your accounting software is giving you a different figure at 30 June compared to your bank statement, that usually signals that you might have transactions that you haven't reconciled, or potentially you've got an issue where you've done some internal transfers from one bank account of your business to another bank account of your business, and those figures don't match. You've accidentally reconciled some transactions. So that could be an issue there as well. What we see sometimes as well is the feeds get cut off and some transactions are missed. So what you'll need is to import those transactions that haven't been imported into your accounting software and reconciling them to make sure that those figures from your bank statements actually match what your accounting software says. Alison, any golden nuggets you'd like to share with everyone?
Pretty much with your bank account, credit cards and loans, there are some banks that are not supporting bank feeds. So you just need to make sure that you do export CSV files and bring them into your Xero or your Maya, whichever accounting software you use, to ensure you've taken up their income and expenses related to that account. The other thing is you can clearly identify, if you're using Xero, for example, you can clearly identify from your dashboard whether your bank account has unreconciled deposits in it or unreconciled expenses, checks, whatever that looks like. The bank statement balance versus your Xero balance will be different. So if you don't have a green tick on your bank account on your dashboard, that would represent that there's an issue that you need to look into. Bank feeds do stop on a regular basis. We see this all the time, and it may just be for a day, but they do stop, and that means you're missing a whole day of transactions. So it's super important that you do reconcile your physical bank statement with what is in Xero. You can't 100% rely on the bank feeds being correct.
Absolutely, totally agree on that note. We see it a fair amount when we get to prepare the tax returns and financials, and we see issues come up when a client sends us the bank statement and like, oh, the figures don't match. There is a transaction missing, or a day of transaction, or sometimes weeks of transactions missing. So it's important to get that important into your Xero, as well as any loans. So many loans can't be automatically fed into your accounting software. So you have to manually check that that the balance on Xero on your balance sheet actually matches your loan statement.
Yeah, and just on that too, Ali, if you do have accounts that are not supported by bank feeds, you really should be bringing that CSV file into your software on a monthly basis. Loans in particular, some of them have large interest amounts on them that you need to be classifying into your P&L so that you are reading accurate financials. And the other thing is, whilst you've got your statements handy, cross-checking them, please save them so that they can go to your accountant at year end, because it's the first thing that they will ask for is copies of bank statements supporting the bank account shown in your balance sheet.
Agreed, that's very, very helpful. Alrighty, second on our list is managing your credit. So this will be your vendors or your suppliers that have provided you with products or services, but you still owe them money. Now, when it comes to this, is you want to review your draft bills if you've got any bills that you haven't approved yet. They've been sitting there and you forgot to approve them. You want to do that, as well as match any credit notes that you've raised in your accounting software to any bills, as well as preparing a age payable report for the financial year, and making sure that that figure, that closing figure, what that report says, if it says $30,000, that figure needs to match your balance sheet figure on your software. So if those don't match, there might be an issue there that you need to resolve. And be mindful of any duplicates. So sometimes, we're doing this at the end of the day and you're not mindful and you accidentally put two bills in there. So be mindful of any duplicates as well. Alison, you want to share any of golden nuggets when it comes to accounts payable?
Yeah, just review your accounts payable really thoroughly, because we quite often see old COD receipts. They're receipts that you pay for things like fuel and things like that, that you have to pay for upfront when you receive the goods or service. We see those sitting in the accounts payable really often as unpaid, and that is because they've been processed through the bank correct process already. So then you've actually got a duplicate in your file. So just make sure that everything in your accounts payable is correct and is in fact outstanding. If you've got really, really old outstanding payables in there, they should be red flagged. Are they accurate? Have you had a recent statement from your supplier? And the other thing I just thought about, just going back a little step regards to the bank rec. If you've got really, really old unpresented checks, that might be an opportunity to deal with those, whether that means cancelling that check and reissuing or contacting the person that the check was written out to. But yeah, that's really all about on age payables, and definitely compare your age payables report back to your balance sheet, because those reports should be exactly the same in terms of the balance. And if there's not, it may be a case of you have put the invoice date of the supplier after the payment date. In MYOB especially, that does create problems. Xero it won't, but in MYOB it definitely does.
Extremely helpful tip there, Alison. From a tax perspective, I've got a couple of tips for you guys. What you want is, if you've got a supplier that would normally invoice you in July in the first couple of weeks or so, ask them to invoice you a little bit earlier. That usually help bring in the expense within this financial year so you can claim it as a tax deduction. On top of that, you can also prepay some of the expenses. So if your business has the available cash flow to be able to do that. So we don't recommend this if you don't have the cash to back that up. You'd rather just save it, especially in this economy right now with all the prices going up. So small businesses with a turnover of up to 50 million can bring forward 12 months worth of expenses. So this could be like an insurance, accounting, bookkeeping, marketing fees. Any of those type of expenses can be prepaid in this financial year, but they relate to the next financial year, but we can also claim them as a tax deduction. And last but not least, in terms of a tip, you want to review for old bills that are sitting in your accounts payable. And if there's a dispute between you and your supplier and you're released from paying that bill, let your accountant know so we can treat it properly from an accounting and tax perspective, because that bill needs to be removed. But there is a way to do it from our end. So just let us know and we'll be able to do that. You can ask your accountant or bookkeeper, they know how to deal with it effectively. All righty. Next on the list of our hit list is managing your debtors. So this will be your customers or clients that owe you money. So this one is very important if you are a business who doesn't do payment in advance and you rely on, completion of a project or part completion of a project. So you want to review all your draft invoices and making sure that you approve them if, applicable to your situation. You want to match any credit notes that you've raised with the invoices that you've approved, as well as utilizing the aged receivable report, very similar to the accounts payable report. And you want to make sure that those figures match the balance sheet figure on 30 June. And you want to also follow up any overdue amounts. So this is optional, but if you have a client that hasn't paid you in the last 3-4 months, make sure that you send them a statement or give them a phone call for them to pay you because you rely on that cash. So that's very, very important there. Alison, if you want to jump in and share.
Yeah, my biggest tip around end of financial year for your receivables is to write off any bad debts. Otherwise, they are being classed as income and you will be getting taxed on them. So write off any bad debts. Ideally, you would have already been sending statements to your customers every month and you'd have a set debt collection process in place. So you shouldn't have too many bad debts, but if you do, end of financial year is the time to write them off if they are unrecoverable. And then what we see commonly is that there are a lot of credit notes left in files that haven't been allocated against invoices. If you've had credit notes in the file for a long period of time and you do not have to pay that money back to the customer for some reason or other, please let your bookkeeper or accountant know so that they can deal with that appropriately.
Absolutely. And from my end, just as a tax tip, you can delay invoicing until July. If you're going to invoice and it's close to 30 June, you can hold off a couple of days or so so you can invoice in July and delay that income for being taxed in 2025 financial year as opposed to 2024 financial year. So that's a little bit of a tax tip there for you. Next on the list is managing your inventory. So this will be for businesses that sell products or manufacture products. So what you want to do is organize a time to do a stock take. And as close to 30 June as possible. And ideally, you want to do it outside of working hours so you have uninterrupted time for you to focus at the task on hand. And if you're using an inventory software, you want to make sure that those figures on your software match the physical inventory. If they do not match for whatever reason, you've got inventory that has gone obsolete or bad, let your bookkeeper and accountant know so they can treat it properly there. Alison, I'm sure you've had your fair share of issues when dealing with inventory management with clients. What's your takeaway?
Absolutely. So a lot of people are using add-on products now, add-on softwares that are meant to integrate seamlessly into your software, into your accounting software. That does not always happen, and sometimes it doesn't seamlessly integrate at all and can just create a mess. So you need to make sure at the end of financial year, and ideally at the end of every month, that your stock value in your inventory software is matching what is shown on your balance sheet as your inventory value. Those adjustments up or down need to be taken into account at the end of every month, ideally. It's also a really good time to clean up your inventory in your software. If you do your stock take and you've got 1,000 inventory items coming up on there and you've got nothing in them, they're obsolete and you haven't used them or sold them in a period of time, then now's the time to clean up that inventory list. And that's about it on inventory.
Thank you for that, Alison. I think from my end, just as a tax tip is you can utilize something called simplified trading stock rules. So if you're a small business with a turnover of less than 50 million, and the difference between your opening and closing stock is less than 5,000. So this is for businesses that keep stock levels very similar. They don't fluctuate a lot. You can use this method. And what it means essentially is you don't have to do a formal stock take like everybody else. You just have to take a reasonable estimate of the quantity of stock that you have and the cost of it, depending on which figure you're using. Sometimes you use market value. A lot of our clients will use the cost method. So it's just an informal stock take. You don't have to be too diligent when you're doing it. So that's a little bit of a tax tip there. As well as on top of that, but it's not tax tip, it's more so if you've got any stock that is not moving at all and you want to take it off, so try to price it down a little bit so you can sort of empty it from your warehouses or where you store your stock, so you can easily then replenish that stock with new items that actually sell. It's not like you're trying to make less money, but you're trying to get it off your shelves as quickly as possible. Hope those help you. Next on the list might be a crowd's favorite, especially when utilizing end of financial year. I'm sure you've been receiving a lot of different ads on your social media and when you're watching TV about end of financial year deals. And I'm sure a lot of nifty business owners are waiting for this time to purchase a laptop or an asset that they've been waiting for throughout the financial year. We don't generally support spending for the sake of claiming a tax deduction. That's not what we're here for. What we want to make sure is for you to buy the asset that you really need. And ask yourself, is this really a need for the business? Or is it something that you're just buying just to claim a tax deduction? You want to make sure that you're getting the value of that asset and not just for it to be claimed as a tax deduction. What you want is review your fixed asset register if you've got one, or your fixed asset account if you're depreciating things. We've got the instant asset write-off of 20,000. Now, sadly, that still hasn't passed into law. Parliament are still fighting. The lower and the upper house still haven't agreed on them. They'll eventually pass. I'm keeping an eye on that, but they still haven't agreed on the amount. There was a suggestion to increase it from 20,000 to 30,000, but the House of Representatives haven't agreed to do that, and also increase the from just the small businesses being able to claim it to medium businesses as well. So turnover of up to 50 mil. So I think we'll definitely get the 20,000 deduction, but it hasn't become low just yet. So if you've got that account for depreciation, you want to go through that account a little bit more diligently now. Ensure that you've got all the assets that you purchased during the year, they've been captured in that account. And if you've got any assets, for instance, that you've sold as well, you want to let your accountant or bookkeeper know about any assets that you've disposed of. Alison, you want to share any tips or tricks?
Yeah, something we see often is not with our current clients, but with clients that we take on, new clients, is that they have been paying a loan for a particular asset purchase, a motor vehicle, for example. All the loan payments are going through the book. And so there's a loan account on the balance sheet. However, there's no corresponding asset for that loan. So that should be a red flag for anyone. If you've got a loan or an asset of some kind, there must be a corresponding asset. So these people are missing out the tax deduction and the GST deduction as well. So that's super important. And the other tip I would give you is to ensure you have copies of all your assets tax invoices, and that you supply those to your accountant at year end. I would just keep them in a folder or attach them if you're using the function in Xero, attach them to the actual transaction in Xero so that your accountant doesn't have to ask for copies of those when they do your tax returns.
Bang on there, Alison. I think from my end as well, something that I've been seeing a lot is we do review last year. When we're going through your books, we look at last year and how much you spent on assets. And if there is a huge difference, you know, like every year you might be purchasing a similar asset, we go through them and ask questions and see, okay, were there any assets that were missed? For instance, you paid for them using your personal account. You might have a better credit card deal or some sort of deal, and you went and purchased them using your personal funds, and we can't see them on your accounting software. So we don't want to miss those tax deductions because you paid for them personally, but they're effectively for your business. So please go through and check whether you paid for an asset using personal funds, or potentially you've got an asset that you hold personally and you want to transfer it to the business. That can also be done, but you want to speak to your accountant about doing that. That's a very effective tax strategy as well.
Yeah, and just one other thing, Ali, is that you can cross-check the balance of your fixed assets on your balance sheet. The last financial year that you've had your financials done and your tax return, your accountant should have provided you a fixed asset register, which will have a closing written down value on it. So that figure should correlate to what's on your balance sheet at the end of that financial year. And then you simply just got to review the current year. So that is just a way of cross-checking to make sure what's on your balance sheet is actually correct.
Absolutely agreed. Thank you for that. Next up, we've got payroll, super, and STP on the list. Now, this is a race until publishing your payment, your income statement, and filing them with the ATO. You've got deadlines to catch up to. So you want to check that all your pay runs have been posted and the payment date actually falls within this financial year. So if you post a pay run at the end of June and the payment date, for instance, falls in July, that won't be captured in 2024 financial year. And if you pay it, especially when you're planning on paying it before 30 June, that won't be captured. So make sure the payment date is falling within the 2024 financial year. Also, you want to confirm that all your pay runs have been filed with the ATO, so there's no issues when it comes to data matching. Big Brother is always watching, so you want to make sure that everything is done correctly. And something that's been really helpful is you want to check that you've actually paid those pay runs. Occasionally you might miss it here and there. I'm sure your employees will let you know. But if you accidentally miss a payment, you want to make sure that you go and correct that mistake. And if whatever software you're using, you want to bring up the payroll activity summary for the year. Ensure the accounts that you see on the screen that they match. So your earnings for the year is matching your total wages and salaries on your profit and loss statement. Your super should match your total super for the year. We see a lot of mistakes with people who don't have bookkeepers is accidentally allocating super payments to super expense account when it should be allocated to the super payable account, which is a balance sheet item. So you want to make sure those figures exactly match. And if they don't, there is some sort of issue there that you have to sort of drill down a little bit deeper and find out what's wrong. So do you want to share golden nuggets?
Yeah, that would probably be my biggest golden nugget. Please reconcile your payroll before you finalise the payroll year and your STP, which is due 14 July. A lot of people do not, that don't have bookkeepers, do not reconcile what they have declared to the ATO as wages and PAYG back to what's appearing on their balance sheets and P&Ls and also on the payroll summary. So all those reports and figures have to match back. I actually have a template that we use at year end, which I'm happy to share with you all, that we actually reconcile, how we go about reconciling payroll at year end. The other tip I would have is that if you want to claim your super in this financial year, then it needs to be paid prior to 30 June. We can touch on those due dates a little bit later in the session, but you might need to bring forward a pay run, for example. If your pay run finishes at the end of the last week in June and you're not going to pay it until July, you might want to consider paying that on the 27th of June, which is going to be a Friday. That way you've got the full year tax deduction for your payroll and your super if you're going to pay it on time.
Absolutely there.
Aside from that, that's about it really. Just ensuring that all your employees' information is also correct before you finalise the STP for the year.
Fantastic. And from my end is reportable fringe benefit. So if you're providing any benefits to your employees, that also includes the business owners. So if there is any benefits like car, including electric vehicles, gym memberships, paying for private health insurance, that amount is not taxed for the employee, but it gets reported on their income statement, and it affects things like your Centrelink benefit, child support, your HECS debt. So those things are in the back end that you don't really factor in, but it does affect a lot. And what we see is with the intake with electric vehicles, even though there is an exemption that you don't have to pay fringe benefit tax, well, the business doesn't. You still need to report that benefit that the employee received on their income statement. So your accountant should know how to calculate this. But before you file your income statement, make sure that they've given you the figure for you to add into your accounting software when processing that STP finalization. Not everything needs to be reported. So these are the common things if they go above a certain amount. Usually it's cars is a big culprit. Sometimes it's gym memberships or private health insurance. Yeah, that could also affect your reportable fringe benefit amount figure.
Hey, Ali,
All right.
I've got a few questions in the chat box. Cara
Yeah.
has mentioned, if my last pay run and payment date is on 20 June, can I finalize STP on that date or will I miss the deadline?
on 20
Uh,
June.
You can pay your payroll then on the 20th of June. STP doesn't need to be filed until finalisation until the 14th of July. And STP, to answer Mark's question, stands for single touch payroll. And every time you run a pay run, you have to report that pay run via STP to the ATO. This is a part of their data matching service. So you're reporting the gross wages, you're reporting all the employee details, you're reporting the PAYG. So the ATO, in effect, is receiving that data every time you run a payroll. And at the end of the financial year, you have until 14th of July to finalise all that information and send it off to the ATO. If that answers
and we've got here
question.
is the dates when you need to finalize your STP by. So if you don't have any closely held employees, what closely held employees means is, you're the business owners and, relatives of the business owners. You've got your directors, your beneficiaries of a trust. Those are considered closely held employees. So if you don't have any of those, you have to finalize it by 14th of July. If you've got a mixture of closely held and arm's length employees and more than 20, 30 September is your date for closely held employees and 14th of July for all other employees. So there's two different dates there, which is appreciative of the business owners who pay last minute bonuses or director fees, that you don't have to finalize it until 30 September. And if you've got only closely held employees, that's, you've got your mom and dad kind of business or partners that are running a business, you've got only 2 employees, you've got until the lodgement of that employee's income tax return. That's an individual tax return. So if you've got one individual that is an employee and they're closely held employees, and if you've got a tax agent, you don't have to finalize the STP until, let's say, 15th of May the following year. So much better than the 14th of July. All right, next one is taxable payment annual report. So this needs to be done by the 28th of August. So businesses that are in the construction, cleaning, your IT, your security, surveillance, all of those type of businesses need to lodge a taxable payment annual reports, ensuring that they report how much they paid their contractors, because those businesses hire a lot of contractors and they need to report how much they paid them and their details as well. Alison has some really awesome tips to share with you with TPAR. You want to impart your wisdom?
So with the TPAR, most accounting software, you can lodge a TPAR report through the software. You will need to ensure, as a preparation leading up to that due date, that you have the full business name, ABN and address of your contractors. The TPAR report will not lodge without those. The other thing is to ensure that the figures that you are actually reporting do fall under the reportable requirement and match back to the GL account, the general ledger account on your profit and loss. Just as a cross check. So the gross amount you're paying that contractor, you might have a subcontractor's general ledger account, and that subcontractor general ledger account should match what your total is that you're telling the ATO you've paid your contractors. But I would prep that well in advance, all that information, because there are a lot of payments to contractors where you've just put through the bill or to spend money through the bank correct process and you haven't actually updated their contact details, ABN, etc., through the software. So that sometimes can need a little bit of homework prior.
Fantastic. And last but not least on our list is super. These are sort of the due dates when it comes to paying super. If you want to pay it early, And for example, if you're using Xero, their clearinghouse recommends that you do it by 2 p.m. Australian Eastern Standard Time on the 18th of June. So you've got 5 days to do that. On the other hand, if you're using Quick Super, for example, due date is the Tuesday 25th, and ATO, Small Business Clearinghouse, if you're using that to allow 7 business days, which will fall on the 19th of June. Each clearinghouse has its own sort of cutoff date, so it's best to check with your clearinghouse. I tried to check for MyOb or QuickBooks, but I couldn't find any information for everybody. So it's best to go directly and check when you need to make that payment. We have some clients, sadly, that have missed out on this because the super payment needs to be received by the employee super fund for us to be able to claim it as a tax deduction. So the earlier you do it, the better if cash flow permits. And I recommend you do it even a couple of days earlier, because you never know when you'll have an issue like an error, or you forgot to approve the payment, or the payment bounced from, taken out from your bank account. So be mindful of that. Just allow for that risk of error to, for you to fix it in the last couple of days. And finally, your WorkSafe Queensland wage declaration is due by the 31st of August. Depending on, this is for Queensland where we're based, but each state will have their own. Sometimes different businesses, depending on their size, have different due dates as well. So check with that relevant state authority for you to report the wages. All right, this brings us to the end of our session today. Thank you so much to everyone who's joined. Apologies for running a little bit over time. There was a lot to cover. If you want to look into a bookkeeper that can help you, Efficiency Partners can be reached. We've got Renee, which is the practice manager. You can email her and she will be able to help if you need a bookkeeper, or you also want a second opinion or a current bookkeeper. You can also reach out to them and suss them out. And finally, now we've got Q&A. If you've got any questions, I'm happy to stick around and answer any of your questions.
Ali, I'll just bring some up that was in the chat box. One from Liz. If company only have exempt electric vehicle, do we have to register for FBT and lodge FBT return?
You don't have to, but it's recommended that you do. The reason being is you want to start, what the recommendation is, you want to start that auditing clock. So if you're not registered for FBT, effectively the tax office can come back and audit you at any time. There is no time limit. But if you're registered for FBT and you lodge a nil return, then they've got only, I think, 2 or 4 years to come back and audit you. And that's it. So if you've made a mistake or whatever it is, after that time frame, they can't do anything unless it's obviously tax avoidance. That's something else. But yeah, like ideally you want to register for FBT and lodge a nil return.
Can I just ask about that vehicle in FBT?
Yes. Yeah.
It only applies to private use, right? So if an employee has use for a vehicle and it's garaged at their property, but it's only used for work, there's no FBT, right?
Correct. With that, if it's at their personal home, and if it's only minor that they, because when it's garage at their home, it's technically that the wording is like it could be available for private use, but if it's under 5% and they don't really generally use it, or the company policy says they're not allowed to use it for private use, then yeah, it will be exempt. But in terms of like reporting, there's no private use. You don't have to report anything on their income statement.
Thank you.
Any other questions
Just
that
another
you have?
one
Yeah.
from, I think it was from Cara. With
Yeah.
super, if the last pay run is after that, 18th of June.
Yep. With that is, you can just pay it in July when it's due. You don't have to pay all the super for that quarter before. So you're welcome to just process whatever is ready to go that you've already, because you don't want to pay it earlier if it's after that cutoff date and you don't really receive any benefit if the payment is not going to come out of your bank account until July. Sorry, it won't hit the employee's bank account until July. So you might want to hold off and just do it before the due date, which is the 28th of July for the June quarter.
And just on that, Ali, Cara, if you're paying your super quarterly, you could always pay all of April's and all of May's and up until the last pay run that you've run before the 18th of June. And that way you're only going to miss out on a couple of weeks tax deduction for your super. Alternatively, if you don't need the tax deduction for the super, there's no need to pay it before 30 June. So it really is only if you need the tax deduction that you need to pay it before 30 June. Otherwise, you have until the 28th of July. But you can always pay right up for that quarter until, 1 April to 18th of June.
Correct, absolutely. And with the new rules coming in a couple of years' time, you'll have to pay super when you process your payroll. So it's good to get into the habit of paying it a little bit early if cash flow permits. But yes, you don't have to. There's no one legally. You've got until the 28th of July to pay June. It's usually the month after the quarter ends, 28 days later.
Can I just ask a question on that?
Yeah, go ahead.
If you just said if you don't need the deduction, how do you decide if you need the deduction more this year or next year?
You sort of look into a couple of things as we do during tax planning is we look at is the deduction worth more this year or is it next year? So this year, for instance, if you're on a high income, let's say personally, and you've got a trust and he runs a business and you made a lot more profit this year, then you might want to do it this year because you've got a better tax cut, a better sort of deduction this year because your tax is higher. And with 1st of July, a lot of Australians are getting some form of tax cut. So bringing it into this financial year can provide you a better tax deduction from a tax perspective. Does that make sense?
Sure, if we're going to get tax cuts.
Yeah.
Yeah, just on that, Ali, just in relation to those tax cuts, which are starting at 1 July, those new tax tables have now been released. If you have employees that are on salaries and you have an automatic transfer set up in your bank account, please ensure you change those because the tax rates are changing and therefore they will be getting a higher net pay. And
1st of July.
1 July they're changing, yeah. And the other thing just on that is that if you have employees on salary packages, i.e. $100,000 a year, including super is also changing at 1 July to 11.5%. And so if you do have employees on those kind of arrangements, they will have a difference in their pay also because super is going up 0.5%. So it's an idea to have those conversations with your employees before 30 June.
Absolutely. Your accounting software should be equipped to handle all of those. The super rate will be adjusted. Their net pay will be adjusted as well. So yeah, so when you have automatic payments happening because your payroll is regular, yeah, you do need to make amendments on your auto pay with your bank.
Absolutely.
All right, any other questions?
Thanks for the heads up on that one.
Have anything else in the chat box? Thanks, Ali.
I'm just going through the chat box. I don't think there's anything. Is there anything else from anybody?
Bringing forward of expenses.
Yep.
Well, that just depends on how our cash flow is looking, I suppose. If you want to pay insurances up front.
Correct. Yeah. As well as sometimes that is also like a business decision. If they're able to give you a deal on that, if you're paying upfront and in full, if they're going to give you like 10% discount or whatever it is, you can pay it a bit early and then get an advantage of that, not a tax advantage, but cash advantage.
Yep. Yep.
And you can do that up to 12 months. Even rent, yeah, you can do that for rent if you want to. It doesn't have to be 12 months; it could be a month worth of rent. Even if, let's say, if you've got an agreement that your policy is going to go up or something like that, and you can have an agreement where you pay a little bit lower now and pay upfront. A lot of insurances will give you a discount for payment in full and upfront.
Yes, yeah, there's usually an additional amount if you're paying monthly.
Yes, yeah, correct, yeah. They want all your money.
Yes.
All righty, well, if that is it, thank you everybody for joining today. You have been awesome. If you want to follow us on our social medias, we do publish regular information of tax tips that you can rely on. You can also visit our website and suss us out if you are not a client. But we'll love to see you in another webinar if you can make it.
Thank you.
Thanks everyone.
Thank you, everyone.
Bye-bye.
Thanks for
Alison.
having me. Bye-bye.